All right, welcome everyone. This is Bob Maurer. It is Thursday, the 20th of Feb, around about 10 to 4ish my time. Want to do a review of the current seasonal futures spreads strategies, see how things are looking. I know I did one of these just a few days ago, but I got a little bit of housekeeping to do based on a stop that was hit in our RBOB spread. And then also I want to introduce a few new ones. So let's dial on in, see how things are looking. Down into the portal, you'll see the most current PDF version right there. And here we have it. So this would be bleeding into next week. So I put it for the week of 223. And I've got it over 2 pages here. I see that there's a bit of a redundancy. So I'll clean that up, and put in a new PDF, but we can work with what we have here. So number 343, bull spread, top row on this first page here. This one is now flat. We got stopped out. I tightened the stop to break even, and unfortunately it got hit. So we'll look at that one. Then we got 346 bear spread and lean hogs. That one's ongoing. 347 bull spread and cotton. That one is ongoing. Then the 346 and 347 are again here. Bottom three rows here is what I want to look at. These are new ones that I'm introducing. Start dates were a few days ago, but nonetheless, the trade is evolving, so we're okay, even though it's a little bit later than the start date that I'm introducing this. 348 bull spread in WTI light sweet crude, June versus July. 349, a commodity we rarely have on our radar, which is orange juice, but this is the May July bull spread. And then 350 bear spread in live cattle futures, June versus Augie. So we'll look at those. Obviously, we have all the entries and exits. And I'm going to be publishing a deeper dive into each one of those too, so you can get a better feel for the backstory on them and make sure we're all on the same page. Okay, first things first, let's just take them one by one. The RBOB unleaded gas. This one is disappointing. So I revised the targets and the stop a few days ago, and unfortunately, this thing it's not over yet because the season ends on the 24th, but essentially it kind of is. However, it broke down rather than rally higher. So the benchmark was 456 up here. That's where the seasonal started. And the seasonal leans towards the bullish side, where by the end of the window, Feb 24, this market's supposed to end up north of 456, and instead we are way down here. So thankfully, we did a really good job at picking a level down here, where at one point we were up about 100 points or so, maybe like 150 points. And then the market just kind of broke down. So our original target had been a little bit higher, and I revised them lower, but not soon enough because this thing broke down over the last 3 days pretty steadily and unfortunately hit our stop, which was rallied or raised up to 347. So ended up with nothing on this one. Always trader's prerogative, and I think I mentioned it. If anybody wanted to lock in more of the gains and could have raised their stop, they would have done better than I did. But in this case, this stop got hit, so this one is going out as a pretty much a push. So we'll keep that one in mind down the road. So RBOB unleaded gas, we're out, we're flat, hit the stop. Okay, next one is the bear spread in lean hogs. So this is number 346. So no change to this strategy. Both levels are in. It rallied through level 1 and level 2, the entry levels. So both should be in, and fortunately so far, had a pretty good down day yesterday, a little bit more follow through today. We're looking for 47.5 on the downside here and maybe negative 12.5, and both those are still in play. So no change to the strategy. Currently sitting with some level of unrealized gain, and so far everything is going according to plan. That's 346. Bear spread and lean hogs. Then we've got cotton. So this is a bull spread. And just blow this up a little bit here. And this is strategy number 347. We're looking to get in at negative 109 and then again down at negative 137. So if you had this prior to the launch of this seasonal, then you should be in around negative 109. That's the only one I see that could be in right now. So basically sitting with some level of unrealized gain for the entry level 1 traders. Entry level 2 are still sitting on the sidelines waiting for it to break down to negative 137. No change to this strategy, and everything seems to be going according to plan. So nice little push to the upside there. Faltered, fell back a little bit, holding the moving average so far. What we'd like to see is another rotation back to the upside. Hit that first target, or the only target really, negative 66. Nope, that's not the only target. Up here, negative 5 is the other one. That's right. Okay, so both are still in play. Okay, so that's strategy number 347, the bull spread in cotton. Let's look at crude here. So this is a bull spread in WTI light sweet crude. First entry level is the benchmark at 39. Second level is 29. Stop at 19. So this is a new strategy I'm introducing. And it is a bull spread. And we are looking for this thing to basically break a little bit and then rally on up to these targets, which aren't that far away. That's what the math tells us, tells me anyway. Could be doable on this particular strategy. So this is a new one I'm introducing. It's a bull spread in WTI light sweet crude, the June versus July. And again, I'm going to be publishing a deeper dive, so you can look forward to that. Give you a little more backstory, but at least these are all the entries and exits, and then the risk reward. Okay, another new one to introduce is the bull spread here in OJ. We don't do this commodity very often, so this is a single entry opportunity. Strategy number 349. It's going to be a bull spread in frozen concentrated OJ in long May, short July. Market's been on a really good downtrend, so this is counter trend. It already had a little bit of a bounce, failed a bit today, ended up at the bottom third of its range. So we're looking to get in at 75, stop at negative 170, and the two targets are 4.25 and 560. So this is a new one I'm introducing, bull spread in orange juice, strategy number 349. All right, so you got the entries, the exits, the risk reward. And then lastly, new one to introduce is number 350, bear spread in live cattle. This is the August versus the June, short June, long Augie. Here's your risk reward profile. And then the approach is going to be to look for price improvement for both entry level 1 and 2. So we're looking for 240 for level 1, 282 to get in at level 2. Stop is 382, and then our targets are down here at 105 and positive 30. We're going to be looking for a bounce and then a break. And pretty much this is going to be a range bound trade. So pretty much just going with the sideways, primarily sideways action, let's put it that way, which has been basically between, I'd say, a price of positive 300 to positive 100. So about a 2-cent range. It's an $800 range for the bulk of this. And we just want this thing to rotate back up and then fail on down. So pretty much stay within this sideways trend. So that's number 350. We got the risk reward in yellow. We got the entries and exits over here. And that is going to be a new one that I'm introducing. All right, so 3 new spreads I introduced to go along with the cotton that we've been watching for a while, and then the lean hog that we are in. And then we got stopped out, unfortunately, break even after having a pretty good unrealized gain there for a while in the RBOB unleaded gas. One other one I just want to throw out there, and I'm not recommending this. You're going to see levels, but I'm not recommending this quite yet, is this natty gas. That gas has been on a pretty good rally. And this is the May versus July. It's a bear spread. When that gas gets going, it can keep on going pretty fast and furious. So I don't want to step in front of this, but I want to keep an eye on this one because it's a nice seasonal to the downside. between Feb 18 and April 10. Be bear spread on this nat gas. But like I said, it's been on a pretty good move to the upside, especially with the frigid temperatures that we've been experiencing across a big swath of the United States. And I imagine this is going to falter at some point. I just don't want to step in front of it quite yet. So the key is going to be for me that it rallies in a new high, breaks, then it has another attempt at that recent swing high and fails. Somehow it fails. Maybe it takes out the high and then ends up at the bottom of the range. Maybe it doesn't quite even take out the high and it just kind of falters. So that might be an indication that I'll be looking to recommend this particular strategy, but I'm not doing it quite yet. So disregard these entries and exits. I was just getting a feel for what the data was doing and how it was laying out with this particular market. Okay, so just something to keep in mind, keep in our back pocket for the moment. All right, so that was a lot. We have 3 new strategies that I introduced. We got 2 that are still ongoing. We got 1 that we got stopped out. So plenty of action there. Let's hope that the lean hogs keep on breaking. That'd be great. Get down to the first target, which is only about 40 cents away. That'd be awesome. Cotton is about to give us an entry, I believe. So we'll see how that plays out overnight. And we will go from there. All right. If you have any questions, comments, anything of interest, feel free at any time to reach out. Be glad to respond as soon as I can. And I'm going to leave it there. And thanks so much for watching.